Have you ever noticed how people treat mortgage interest rates like the stock market? They go up a little, people panic. They go down a little, people celebrate. And a lot of buyers start asking the same question: should I wait? Just yesterday, I had a client who was pre approved with us about a month ago. She sent me a new property that she wanted to make an offer on. So we ran an updated mortgage plan for her, and she noticed something. The interest rate was a little higher than it was a few weeks ago. Nothing dramatic, just normal movement in the market. But it reminded me of something important that every home buyer needs to understand. Interest rates move every single day. They move because of inflation reports, they move because of economic news, they move because of political headlines. They even move based on what investors are doing in the bond market. In other words, trying to perfectly time mortgage rates is a lot like going to Las Vegas and trying to beat the house. Sometimes you win, but the house usually wins. So, today, I want to share with you three important things every buyer should remember about mortgage rates. Number one, interest rates don't follow you, they follow the property. A lot of people believe that when they get pre approved, they have their rate. But that's not actually how mortgage rates work. Mortgage rates are tied to the property and the contract, not the client. That means we can't lock a loan in, an interest rate in for you until you are actually under contract on a home. Until then, rates simply move with the market, and that's normal. Number two, waiting for the perfect rate can cost you more than you think. Home buyers sometimes delay their purchase hoping rates are going to drop. But here's the reality: nobody can consistently predict where rates will go next month or next week or even tomorrow. And history proves how unpredictable this is. The highest mortgage interest rate ever recorded was in October of 1981, and that 30-year mortgage rate was about 18.6%. Now think about that for a second. Compare that to modern mortgage rates today. And on the other hand of the spectrum, the lowest mortgage rate in history happened to be in January of 2021, when the average 30-year mortgage rate dropped to about 2.65%. Now that's once in a generation moment. And nobody knew that it was going to hit the bottom like that even while it was happening. Number three, the right home matters more than the perfect rate. A mortgage rate can always be adjusted later through refinancing if the market improves. But the right home, in the right neighborhood, at the right time of your life, well, that opportunity doesn't always come back around. Real estate is a long-term asset. Trying to perfectly time the mortgage rate is often the wrong thing to focus on. The smarter move is working with a professional who helps you structure the best loan possible for your situation. At Barnett Mortgage, we do something a little different. Instead of working with just one bank, we shop your loan with over 40 different lenders to find the best option available. Our job is simple: find the lowest payment possible for our clients based on the market that exists today. Not the market that we wish we had or the one that happened in the past, but instead the one that is happening right now. So if you're thinking of buying a home in Colorado and you're wondering what today's interest rate means for you, well, let's run a personalized mortgage plan. It takes about 10 minutes and it'll show you exactly what your options look like in today's market. Just reach out to us here at Barnett Mortgage, because when you understand the numbers, you make much better decisions. And sometimes the best move is simply not letting life pass you by while waiting for the perfect rate.